Hi, this is Zak Mir with the Bulletin Board Heroes here at Zaks Traders Cafe for Friday, the 23rd of August. Starting off with the FTSE 100, which is above its rising 50-day line. It's above the floor of that rising trend channel from basically this time last year, and also finding support towards 82.60. We're looking for 82.80 to be the support, but slight overshoot there. Upside here up to 84.30, which is that resistance line projection from May, and if we get really lucky and interest rates tumble, etc., and up to 8,800 as soon as the end of October probably would be the right time frame. On the downside, if we do break down below 82.10 and the 50-day line, then there's a risk of 80.60. That support line projection from back in May. RSI at 55, which is decent. We've had, I suppose, a weak bounce above neutral 50, so the glass here half full rather than half empty for the leading UK stocks. Moving along to the DAX, and here it was all about trying to break a resistance line there, the one there from back in May, 18,600 the level. Not too far away from that. If we can get through that, then obviously we're looking at the highs and 18,900. Best case scenario here would be up to the top of that rising trend channel from October towards 20,000 by the end of next month after the double gap fill, and given the way that the 50-day line currently at 18,200 is rising well. That's the initial support. Worst case is that we have to test the floor of the rising trend channel, or the 200-day moving average below the rising trend channel at 17,600. But it looks as though hopefully we'll stay on the right side of that 50-day line. Dow is next, and here it was about trying to break that line of resistance there from July. Obviously the market's seen it, had a go at 41,000, then came back. But at least while we're above the top of the latest gap there at 40,200, looking for push to new highs, or at least retesting the highs of the year, and then up to as high as 42,500 by the end of next month. RSI at 58 is in a good place for further gains there. It's a bear trap island reversal as well. So gapping down earlier this month and then gapping up recently, and that tends to be a very strong signal as it shows that the bears have been wrong-footed. Moving on to Bitcoin, and it's been a struggle here in recent days and I suppose weeks as well, but the market rather quiet, just below the 50-day moving average at 61,400 and just above the rising 200-day line, 59,800. The more time we can spend above the 200-day line, the better. That gives us more chance of a move up to 70,000 in that March resistance line. That's the upside at the moment. The downside, still the risk of 52,000 and the late February support line projection, but ideally we stay on the right side of that 200-day line and basically the right side of 60,000. RSI is at 52, so we are slightly in the positive in terms of that leading indicator on the upside. Moving on to gold, and continues to be the star of the show, even though we backed off the best levels through 25.50, hoping that we'll have support, which was recent support around 24.80. Worst case is that we have to head to the top of the floor of that channel rather from December, and the 50-day line at 24.20, but still looking pretty good there, even though there is a bit of negative divergence there, so higher highs for gold, but the RSI peaking really at the same kind of levels as it was when we were lower down. Moving on to the stocks, and Celadon seems to have stabilized after today's update. Looks as though we may have a chance of bouncing off the floor of that wide rising trend channel from back in October. Obviously these things not exactly set in stone, but if we can get an end of day close through 30 pence, maybe the shares will try and head up towards the gap area through 50. More likely we're up to sort of the upper 30s or 40 pence, even if we then fall down again. Obviously we don't want to see any end of day close back below 22 pence in the meantime, which was the original August support, but it's a bear trap rebound there for Celadon. On to Conroy Gold, and here we've got a situation where the shares are finally responding perhaps to the gold price. We're above the 50-day line there at 6 pence for the first time since the end of April, and looking for the shares to head to the top of the falling trend channel there from October at 9.5 pence. Not the most high percentage the trade there, but at least we have allegedly bounced off the floor of that channel and going to head up towards 10 pence. Global Petroleum is next, and here the charting situation looking a bit more encouraging. We've got a rising 50 and 200-day moving averages. We bounced above the 200-day line there at 0.08, and above that looking for a retest of the 0.14 pence area, maybe by the end of next month. Ideally, we stay on the right side of that 200-day line. Helium One is next, and the big breakthrough, the 1.5 pence resistance has been consolidated. We're also holding above the 200-day line and the floor of that rising trend channel from June. 1.6 pence above that, looking for 2.5 pence over the next few weeks, maybe by the end of next month. Haven't looked at the following stock for a long time, which is Mobile Streams, and here we've got the possibility of a rising trend channel base after a long time. You can see that sideways shuffle at and above a rising 50-day line, and that suggests that we could head to the top of the channel there, 0.06, even if we fall back again, sort of disrupting the long-standing bear run there. But the key here, holding that 50-day line and the floor of the channel at 0.04. Maintel is next, and here, classic rising trend channel there from back in November, rising 50-day line now. We've pushed through that. Unfilled gap to the upside. There was a bear trap island reversal there at the end of June, beginning of July. That should give the shares enough momentum to head up to £3.30 by the end of next month at the top of last year's trend channel. So looking very healthy there. Looking also pretty good at the moment is Neo Energy. We were looking for the 1.2 pence level after the 0.52 level was rather easily achieved off the back of the news. Remember that we did actually suggest that this was a turnaround situation before the big acquisition news. 1.2 pence the initial target. Above that on an end-of-day close basis, now looking for 1.7 pence, the upper parallel of that rising trend channel base, and looking for that by the end of next month, or hopefully sooner than that. Ideally, we stay on the right side, I suppose, of the 1 to 1.1 pence area, whatever happens. Petrofac has had a few attempts at recovery. Here we've got a nice shuffle along the 50-day moving average, and having another go at maybe heading towards the 200-day moving average at 21 3/4 by the end of next month. We've broken recent neckline resistance at 15p, so above that, looking for obviously a retest of July resistance and basically post-June resistance for the shares. I tweeted out about roadside retail yesterday, and the shares have responded today. We're heading towards the top of that rising trend channel from back in January, nearly 24 pence. That's the implied target. We're looking for that by the end of next month. I suppose if we're really lucky, we'll get that by the end of this month. All the while, we want to stay above 16 pence, which is the floor of the channel, and old July resistance. Roslin has had a major turnaround in terms of its fundamentals, and the shares consolidating after the spike or the gap through the 200-day line. That's at around 12 pence above that. We're actually looking for 25 pence, perhaps as soon as the end of next month. If you're cautious, you'd be just looking for shares to fill the gap up to 16 pence. But even that would be a win from current levels, and we really want to stay above that 12 pence 200-day moving average zone. Shuka, another stock I haven't looked at for a while, and here there's got the possibility of a Celadon type turnaround, so bouncing off the floor of that wide falling trend channel. Ideally, we'd like to see the shares remain above 4.5 pence, because that was resistance recently. Above that, looking for the shares to fill the gap up to maybe 8 pence as a best case scenario by the end of next month. Seems to be the only person who's ever heard of the following stock, Tan Delta Systems, and here you can see that we were looking for 27 pence by the end of next month. I think I covered this stock earlier in the week, and we've just missed that target there, the 27.5 pence a target. I think the high there at 27 pence, but no one's perfect, but let's see if we can get up to 27, 28 pence over the next few sessions. Ideally, we stay on the right side of 24 pence or 24.5 pence. Mid-close on the basis that that was resistance on the way down. I thought a very good RNS from Thor Explorations today, and the market seems to have agreed as well. And looking for 19 pence by the end of this month. Best case would be up to 23 pence by the end of next month, giving the share some time. Ideally, we stay above the top of that gap there at 15 3/4, ahead of a move to 23 pence by the end of September. On to the last two. The first one is Winwood, which has a nice rising trend channel, a bit like Maintel. The top of the channel there heading for £1.55. We're looking for that by the end of next month, while we remain above the March peak there at £1.12. Ideally, we stay above £1.17, which was a recent support for the shares. Finishing off with Wildcat, which always feels like a wild card as well. Here we've still got this rising trend channel base, just 0.16 the level there, and while we're above that and with a rising 200-day line, there is a chance of the shares getting back on the right side of the 0.2 pence area, maybe filling that April gap, but obviously slightly binary in terms of the fundamentals there at the moment. That's it for me today. More updates over the holiday weekend.